Over time, inflation down. Over time, unemployment probably rises a little bit, not a great deal. Growth, sluggish. We're at the bottom of the ISM cycle right now, so growth will be slow. It'll feel a bit recessionary. We're already seeing some more layoffs across various companies. Growth remains lackluster. China is obviously extremely slow. The outcome will be more monetary easing, whether it's cutting of rates or using liquidity, which will raise asset prices. Crypto and technology are the things that are following the forward liquidity cycle, so they've been discounting that. The rest of the market should be a much better year for those of you who don't invest in the racy end, which I cannot understand why you would take a suboptimal bet. And even on a risk-adjusted basis, technology and crypto, risk-adjusted versus anything, are the best investments on earth.
After this week's historic approval and listing of 10 spot Bitcoin ETFs, excitement has spread to the Ethereum community that a spot Ethereum ETF may now be on the horizon. But for those worried that there will be too much celebration in 1 week, don't worry. Securities and Exchange Commission SEC Chair Gary Gensler is always ready to dampen the mood. In an interview with CNBC yesterday, Gensler didn't give much hope when asked if a spot Ethereum ETF is on the horizon. Gensler has said over and over that Bitcoin is the only cryptocurrency he thinks is definitely a commodity and therefore outside of the SEC's control. While the SEC hasn't said anything official about Ethereum's security status yet, it has said in legal filings that it sees all Ethereum transactions as falling under its control. Raoul Pal talks about the recent ETF approval and what happened afterward in this video. He also talks about the potential of an Ethereum ETF and says that it would do even better than a Bitcoin ETF. Let's watch the video and let us know what you think by clicking the like button, subscribing, and leaving a comment.
In fact, I wrote about that in Global Macro Investor this month, trying to explain to people that you think you've got a lower volatility bet, but your rewards are commensurately lower, in fact, even lower than they should be versus the crypto macro setup. But we should see, for those of you who are investors in value stocks, commodities, gold, Russell 2000, all of that, you should have a better year this year. Last year was terrible because the business cycle was coming down. The forward-looking stuff already started going up. But really, we should see the economy bottom, start strengthening Q1. After Q2, we start picking up ISM above 50. Everything's looking fine, and your stock should do well as well. So anyway, so hopefully 2024 is a banner macro year. That's how I'm thinking about it. Should be pretty straightforward. Election cycle, more cowbell. They always have to hand out cookies to the kids, the voters, at election time, and this will be no different. Auntie Janet has been obviously offsetting the quantitative tightening by managing the Treasury General account and the issuance. I don't see any reason she will want to tighten conditions just when they fear Donald Trump the most. They will do everything in their power not to let that happen. And to do that, Donald loves to beat people over the stock market and the economy, and they will go in as strong as possible. So expect plenty of goosing to come to try and win your vote. Now, remember, just talking about elections, I've mentioned this before, AI is going to be the new participant in the election, and you are going to lose your fucking minds. Many countries around the world, not just the United States, have elections coming up, and AI will play a part. Nothing you see online, nothing you hear, nothing you read, and people you talk to online, none of them may be real. And it may look like, excuse me, it's me talking to you, but it's probably the AI. Unless it's on an authentic channel, like my Twitter feed, or elsewhere, like the Real Vision platform, behind the paywall, the Real Vision video channel. If you find clips of me online saying crazy shit, which is I do say a lot, don't trust it. Don't trust anything you see, and you will lose your mind. You'll hate your neighbors, you'll hate your brother, you'll hate your sister, your wife won't talk to you, all because of the anger and resentment this election is going to bring about. So anyway, I'm keep warning you about that. The outcome will be digital identity, and the outcome will be, my guess is that tech companies are going to get sued by the government like the banks did after 2008. Anyway, that's all to play for on the cheery note.
The SEC might be even less open to a spot Ethereum ETF if it thought of Ethereum as a security compared to how it was with the Bitcoin ETF, which it rejected for years before being basically forced to do so by a federal appeals court. That same court decision, however, might also force the SEC to approve a spot Ethereum ETF. As Gensler himself said this week in his statement about the Bitcoin ETF approval, the circumstances surrounding CR.
Let's do crypto quickly. ETF, hell yeah, that was a bit of justification after fucking 10 years of fighting. But we got there. And, you know, I've explained it before, how I think of this is in two terms. One is anybody who was an investor in Bitcoin in 2011-12 was like a Series A investor. 2013 cycle, maybe Series B, 2015, 16, Series C, the last cycle, Series D, we've just IPO'd it. And usually when IPOs happen in strong markets like this, it reminds me a lot of the late 90s. And I was trading a lot then. I was at Goldman as well then. And what you found is after the IPO, it would launch and it would be choppy as hell for a while. Sometimes it would sell off quite sharply. Facebook sold off really sharply as people took profits, repositioned. Now, don't forget, a lot of people have front run this ETF. So they're going to want to unwind. And many of those are going to switch to ETH that I've talked about before. They think, rightly so, that ETH is the most likely candidate for the next ETF. And if Bitcoin went up 100% because of this ETF, ETH will go up 300% because it's less liquid, put the same amount of money in. Also, there's a lot of people unwinding the GBTC arbitrage, closing that position, selling out, moving into a different ETF. There's a lot of shenanigans going on. And you can see that with the net flows. There was 4.5 billion or whatever of total flows. The net flows are much smaller, 700 million or so. It's still the biggest ever ETF launches in history as the series, but it's all to play for. And I want you to understand how this works is, okay, all of the pre-orders have now been filled. That was all of these ETF providers going to all of their clients, begging them, you need to do this, you need to do this, you need to do this. Everyone's done that. Sure, there'll be some follow-on next week. A lot of the GBTC guys are unwinding, and that will go, some will wait a few days, see if the market is stronger, whatever. So that goes on for a while. You've then taken forward or brought forward a lot of demand. By the end of it, maybe it's 1 billion, maybe it's 2 billion of demand you'll have brought forward. So then who's the buyer? You've got the people who front ran this who want to sell. So you're going to see volatility. And I've always reminded you guys in the do not fuck it up mantra, part of that is expect 30, 35% pullbacks. Could be less, but just expect them. And that often happens when you get to this kind of 61.8% Fibonacci level in the first leg of the bull run. It often corrects sharply. People get washed out, leverage is cleared out, and then the real run starts. And the real run is the run to all-time highs and beyond. That usually starts around the halving. So I'm guessing there's maybe a month or two of chop. And chop in crypto markets is like down 30%. It's just sideways chop. So just be careful out there. I could be wrong, could keep sailing higher, but it just feels like it's trading a bit heavy. And even if it does as a spurt higher, I don't think it makes much progress yet. But this ETF, it's going to attract people because the markets have been strong. Last year, crypto, Bitcoin itself was 160%, right? That doesn't go unnoticed, considering even the NASDAQ managed 50%. So it's like 3x the NASDAQ. But let's start with the RAAs, the investment advisors and the financial advisors. Those guys aren't on Twitter. They have no idea what any of this is going on. All the drama that played out and the false tweet and all of that shit, that total goat rodeo, I don't know any of this. The first they will hear about this is when they pick up Barron's on Saturday morning with a cup of coffee. And they'll go, oh, Bitcoin ETF. And Barron's will probably have some cynicism in the article, let's assume. And they're like, well, that's interesting, but, I'm not sure it's for my clients. And they go about their business, and then they go and see Jack, their big client, on the golf course that weekend. And Jack says, "Hey, what do you think of the Bitcoin ETF?" And the RAA will repeat what he read in Barron's and what he saw on Fox News. He's based in, let's call it Cincinnati, Ohio. And Jack will ask him, and he'll feel a little bit silly. And then maybe next week, he starts reading a few more articles and a few more positive things come out. Then he starts thinking, maybe I should do something about this. And a couple of other clients ask him. And eventually, he goes and has his steak dinner with his other friend, Mark, who runs the tire franchise in Cincinnati. And Mark's got tons of money and he's a bit racy and likes investments like this. And before you know it, he starts building an order book and getting his clients in. He can see they're interested. He's incentivized by the sales process and the commissions. And before you know it, he's mobilized. It's the same with all the RIAs.
A day after the anticipated debut of the Bitcoin ETF, BlackRock's CEO supported an Ethereum ETF. And I see value in having an Ethereum ETF, he told CNBC Friday. These are just stepping stones toward tokenization, and I do believe this is where we're going to be going. Bitcoin Trust was one of several of these goods that went on sale in the US on Thursday after the SEC approved the funds on Wednesday. IBID contributed $1 billion to the ETF's $4.6 billion trading volume. As part of its tokenization efforts, the huge asset manager may list a product that uses Ethereum's native token. Putting real or digital assets on the blockchain as tokens is tokenization. Tokenization may solve money laundering and other corruption issues. He said he saw cryptocurrency as an asset class, especially Bitcoin, that protects against geopolitical risk like gold did for hundreds of years. After euphoria over the new Bitcoin ETFs approved this week went away, Bitcoin lost almost 10%, or $42,000, on Friday. Bitcoin reached a two-year high of $49,000 on Thursday when U.S. Bitcoin ETFs began trading. After spot Bitcoin exchange-traded funds ETFs began trading, the price plummeted the next day, which was big for the industry. Bitcoin ETFs are typical investments that allow individual and institutional investors to monitor Bitcoin prices. Friday price decreases may not have surprised. Last month, CryptoQuant forecasted Bitcoin would plummet to $32,000 in the next month once an ETF was approved. Does Bitcoin actually sink that low, or will it rally again? Post your thoughts and guesses below. Remember to like, subscribe, and notify Maine. Thanks for watching.